The next financial statement that you should learn is the income statement. So, what is an income statement? In terms of definition, the income statement or the profit and loss statement is simply a document that summarizes all essential information related to a company's financial performance, such as sales revenues, expenses, and net profits during a particular time period. When looking into the income statement or the profit and loss statement, you can understand how the business is operating, where its revenues and profits come from, and how much you'll potentially earn if you invest in such a business. So, how does the income statement work? Let me give you an example so you can understand clearly how it works. For example, you create a product and sell it for $100. Assume that someone buys your product, so you'll make a revenue of $100. However, that $100 is not the actual profit that you've made because you had to spend some money manufacturing that product. So you need to take away the cost that you've spent on creating the product from your revenue. So the amount left is your gross profit. Again, it's still not the actual profit that you've made because there are some more types of expenses that you need to take away from your revenue. Let's imagine when you sell a product, you need to spend some money on marketing and selling it. Such expenses are considered operating expenses. And in addition, you'll have to pay the income tax. If you borrow money to manufacture the product, you'll have to pay some interest expenses. So in order to calculate your actual profit or your net profit, you need to subtract all of those expenses from your revenue. As you can see from our example, you sell a product for $100, but the actual profit that you've made is only $25. That's what the income statement can show you and help you understand more about the business that you're investing in. Besides the sales revenue, some types of expenses, and the net profit, another figure which is also shown in the income statement is the earnings per share. The earnings per share is calculated by taking the net income and dividing it by the number of shares outstanding. In very simple terms, earnings per share is simply the earnings that you'll earn from every share you're currently holding. In fact, you don't need to calculate this figure because it's always presented on the company's income statement. You just need to learn what it is and know how you'll make a profit when you buy a company's stock. Here's an example of the income statement. As you can see, we always have the sales revenue figure, the cost of goods sold, the gross profit, different kinds of operating expenses, the net income, and the earnings per share. In fact, you only need to remember the income statement formula, and by following the formula, you can easily understand everything shown on the company's income statement.